Ladies and gentlemen, shit could get crazy this week in the stock market. Now, I want to provide you guys the context here because I am not going to be the doomsday prepper, the guy that prepares you for the end of the world, for the end of the financial markets, but it could get very, very turbulent. Based off of what we've seen on Friday and what is going to be happening this week, there are some things that you need to know. And just a fun fact before we start this video, 20% of the S&P 500 and about 25% of the NASDAQ is controlled in 4 stocks that report earnings this week. You have Apple, Amazon, Google, and Microsoft. They control 20% of the S&P 500 and over 25% of the NASDAQ. So we have a lot to talk about. Let's make some money, baby. This week is going to be a good week. Speak it into existence. I'm not into all the crazy, I don't collect crystals or nothing. I know a lot of your girlfriends probably do. No shame on that one, and my ex definitely did, but we are going to speak it into existence. We are going to make some money. If you guys want to come trade with me live in real time, get access to all of my trades, as well as join a group of over 100 active traders, link down below in the pinned comment. If you join before Monday, before prices are raised, you will have a locked-in rate for the rest of your life. Now, we have been hitting massive trades last earnings season, in between last earnings season and now, and we have also already hit some massive trades. So if you guys want to come join that, link down below in the pinned comment. Just know that if you're trading options, if you have no risk management, you could lose all of your money, or you could 10x, 20, 30, 40x your portfolios. Nothing is a guarantee. We have done all of that. We have hit massive trades. We have lost money. So just know that before you guys join, nothing is guaranteed, and you can really choose to take your own destiny into your hands. And that is another tool for you guys to do so for a very low cost. So link down below in the pinned comment. That is going to be the sponsor of this video. Thank you guys for tuning in. Now let's talk about why shit could get crazy in this upcoming week. All right. So first thing you guys need to know is that the Fed is not your friend. The Fed is going to be not this week, but the week after that. And if you want more specifics, the Fed is 1 week, 3 days, 13 hours, and 13 minutes from now. The next Fed meeting will be May 4th at 2 p.m. And the markets right now are pricing in a 100% probability of getting a 0.5% rate hike for the next 3 Fed meetings, and pricing in an over 50% chance of getting a 50 basis point rate hike at the next 6 Fed meetings. So things are not looking so good, and it's been like this for a while. The markets have been pricing in a 50 basis point rate hike at the next 6 meetings for a long time now, for weeks and weeks and weeks. We have covered it here on this channel, but the Fed actually gave us some confirmation of this. Fed Dally said we need to do a 50 basis point rate hike, and she has been one of the doves of the voting Fed members. So if she's saying that, then that's probably what we are going to get. But we are now in a blackout period, and that is what really caused us to move down dramatically in all indexes on Friday, was the fact that we're going to get, like, more than likely, the Fed pretty much confirmed we're going to get a 50 basis point rate hike, and the markets are finally starting to realize that the Fed is not your friend. So we gapped down a lot. You can see just how big this candle is that we seen on Friday on the S&P 500. We were unable to hold the 50-day moving average or break above that when you're looking at the SPY. So we are really in no man's land. In my personal opinion, you're either coming down to 400 or you're going to come back up depending on how earnings are. And just so you guys are aware of exactly the importance of this earnings season and when these companies actually report, you have Microsoft and Google, one of the 2 largest companies, both of these over $1 trillion market caps, Tuesday and after hours. On Wednesday, you have Facebook, PayPal, Qualcomm. Those are going to be very important for different sectors. Facebook, very large company. PayPal used to be a very large company. That one's also going to be very important, and I think there's going to be a pretty decent trade to be made there. And then on Thursday, you have the other 2 trillion-dollar market cap stocks, Apple, and Amazon that report earnings. So Tuesday and after hours and Thursday and after hours are really going to help or hurt the markets. Facebook did drop the markets a lot last time. They were down about 25% after earnings, and that could be another replay of last earnings season this time around. And we do have trades on Facebook. Like I said, if you guys want access to all of that, all the trades that have already been made, check that out, link down below in the pinned comment. And all of these are going to be very important. This is the most important week of earnings season, and we will see the health of companies for Q1 2022 and kind of get a picture of what to expect for 2022. Now, why am I a little bit more bearish this time around? Well, really a lot of my bearishness comes down to Apple. Apple, as you can see, controls 6.92% of the S&P 500 alone. Microsoft 5.65%, Amazon 3.5%, Tesla 2.27%, but they already reported. Google controls 2.01% in their Class A shares. Class C shares control 1.86%. So if you add up just the companies that I mentioned, the 4 companies, not including Tesla, you get 19.92% of the S&P 500 that is reporting this week. And depending on what happens with these earnings, it's going to send the markets down or send the markets up in a very violent and dramatic way. Now, specifically with Apple, why I'm so bearish on Apple, which sounds crazy, but hear me out here. Apple was a very stagnant company. In 2018, for example, Apple reported $265.6 billion of revenue. In 2019, Apple actually lost revenue, reported $260.17 billion of revenue. So Apple actually decreased in revenue by about $5 billion in that year, and also reduced their earnings, their bottom line profits, by about $4 billion in 2019. In 2020, again, another stagnant year, only growing revenue about $10 billion, about what is that, 10% in 2 years. So they only had about 5% growth on average per year from 2018 to 2020. What happened in 2021? You had a lot of funny money. You had the unemployment benefits. You had stimulus checks. You had child tax credits. So obviously, Apple was a main beneficiary to that, right? So what'd their revenue go to? $365.82 billion of revenue. Earnings, $94.68 billion. So they increased from 2020 to 2021 earnings almost $100 billion of revenue, and their direct profits increased about $45 billion. So people think Apple is this great company that will never stop growing. It's something you have to own, and that's why it's become such a large portion of the S&P 500. Now, my personal belief is that a lot of their demand was really accelerated because people had free money. People got money. If you got a stimulus check, you didn't buy those AirPods, you're a little bit crazy, right? If you wanted something from Apple, a more higher end product, if you got free money, a lot of people went out and bought those products, and that's exactly what happened. So I think it's going to be very hard to prove that Apple can beat those 2021 numbers. And what has been the main factor that has really killed Netflix and Facebook specifically? It is really growth slowing down. Netflix losing subscribers for the first time ever. Facebook last earnings losing users for the first time ever. That has caused major haircuts to those stocks. And specifically with Apple, I want to compare it to those stocks because I think they're very similar in a lot of ways. Going to see declining growth rates. Apple has a PE ratio of almost 27, whereas something like Facebook has a PE of 13.32. So that means for every dollar you put into Apple, it is valued higher than $2 put into Facebook. Why? Because Apple is perceived to have this huge growth rate, which I think will be very hard to do in 2022. So this first earnings is going to be very important, and it's going to set the trajectory for Apple, which controls a vast majority of the S&P relative to other stocks. Hopefully that makes some sense to you, and I think a lot of people can resonate with the theory here that it's going to be very hard for Apple to beat those incredible revenue numbers that they've seen in 2021 here in 2022, and this is going to be the first glimpse into how the business is actually doing. Now, I would watch out for any potential news about buybacks or something else that could boost the stock up, but I think that growth fear, if they see declining quarter over quarter or year over year growth, will be the biggest factor to watch out for. There's really high expectations for Apple. If they don't come through with a Tesla-like quarter and just beat all expectations, they are going to get cratered. They are going to slash in value. And Apple, you can see it's not really projected to drop a lot by even the options. The break even on something like Facebook puts for next week, we'll even go to this week for April 29th. The at the money break evens on puts are 6.4%, meaning if you bought a put right now on Facebook, you would need the stock to close down over 6.4% negative to even make money on these options. Now go ahead, take a look at Apple. What is the weekly break even on a put if you buy it at the money? It's only 3.30%, right? So that's telling you that people really don't expect Apple to fall in a dramatic way. If it does, I don't know if it does. I think there's a pretty good logic here, but if it does, that's where you're going to see the broad markets get beaten into the ground. Now, I have trades on Apple, I have trades on Facebook because I'm bearish on both of those. If you guys want access to that, like I said, link down below in the pinned comment. But nonetheless, that is my theory here. That's why I think things are going to get a little bit crazy in the markets. You're going to see a violent rally to the upside or a violent drop to the downside. Now, on top of that, like I said, the Fed is not your friend. So that's really what caused the markets to drop on Friday. And I don't think that trend is going to go away. The markets have expected these rate hikes, but once the Fed actually comes out and confirms them, you see that the markets were expecting it, but it really was not a reality. It was not really fully priced into the markets. And you've seen a lot of repricing on Friday. And I don't think that is done overall. Now, on Thursday, you have a lot of economic data that does come out that could move the markets in a very substantial way. GDP quarter over quarter for Q1 comes out. It's expected to come in at 1.1%. Now, what are the things that have really been affecting the markets? The Fed and the possibility of a recession. So GDP is directly related to a recession. A recession is technically 2 declining quarters of GDP growth. So if you see GDP numbers coming in under expectations, it's going to be very bad for the markets. Goes without saying, markets will project a higher likelihood of actually seeing a recession. Things will not be good. So there's that. And then you do have initial jobless claims that come out Thursday as well at 8:30 in the morning. And Thursday is also the day that Apple reports earnings. So it's either going to be great. It's either going to be great on Thursday. You know, if Apple beats and GDP comes in at expectations or better than expectations, there's no reason to sell these stocks. They will probably rally, right? And the markets will probably rally in general. If GDP comes in not so hot, if Apple earnings come in not so hot, things are going to get very bad, and this will likely be the worst week you have seen so far of 2022. I don't know which way it'll go. I think there's really a bearish case here for Apple, possibly for GDP, but again, I simply don't know. It will affect AMC stock. It will affect the broad markets in a very dramatic way. That is my theory here. That's really what I expect as far as downside for this week that I would watch for. If those things are very, very bad, then I would really target that low at about 410 on the S&P. If it's really, really bad, like if Apple really disappoints and falls like a Netflix or Facebook did, then I would expect 400 or less on the S&P 500. And that would obviously be the worst week of 2022 that we have seen. So that's really my expectations. If things are good, then I would expect to break above the 50-day, 100-day, and 200-day moving averages. Put us really close to that 450 level on the SPY again. So we're talking like a $25 move likely this week on the S&P 500. $25 to the downside would put us at 400. $25 on the upside would put us roughly at $450. Leave your thoughts down below. in the comment section. What do you guys think about Apple? What do you guys think about these other large tech stock earnings? What do you guys think about GDP? What do you guys think about the Fed? What is going to happen? Source your comments, questions, or concerns down below in the comment section. Like the video, subscribe to the channel if you guys learned anything, or just to keep these opinions coming. That is all I really strive to do, is provide you guys a clear, concise opinion on why I am saying something. But what I do know is that shit is about to get crazy in the stock market. So thank you guys for tuning in. Enjoy the rest of your Sunday. I will see you later on tonight on the live stream. If I don't, that's okay. I will see you in the next one.